Money. Now, okay, time to get your pencils out, folks, not just for tips and trades, but for top tips and ideas, but for top trades, that is, that you can actually act on. We've got three pros together for you to tell you what they are doing with their own and also other people's money, their ideas together with a bit of your savvy and luck, and maybe you can beat the odds this year. In Hong Kong, Kirby Daley joins us, senior strategist at the Newedge Group, a multi-asset prime brokerage firm. He's a regular on CNBC, of course, and he thinks decoupling, de-schmuppling, we are all in this together, Asia and the rest of the world. His top three trading ideas for the year: position yourself to take profits from down moves in equities. In other words, short stocks, bet on the yen, long the Japanese currency, and also trade oil between a $30 to $60 range. Here with me is Aaron Smith. He had Superfund in Singapore. He's managed futures, one of the few strategies that actually made money last year. He claims his funds racked up between 35 to 75% in terms of gains. His top three trading ideas for this year: buy real estate, that's bricks and mortar as well as grass, buy gold, and also, of course, as you would expect, diversified managed futures. And finally, Christopher Brandon. He's head of Rhicon Currency Management, runs a $500 million FX hedge fund. His top trading ideas to focus on short-term trading strategies, whether in currencies, equities, or commodities. He believes stocks will test new lows towards the middle of this year, and the bubble in the bond market will persist for a while, yet driving yields, believe it or not, still lower. Okay, let's get the talk going, guys. And Kirby, let me start with you. Just to sort of put this into context, we're off November lows. Rates are headed towards the floor. Central banks governments are throwing everything, including the kitchen sink, at economies to get them going. Monetary easing, fiscal stimulus, etc. So it looks like we're in a better position right now. But the key investment question, I think, right now is it safety or is it returns that we should be looking for right now? What do you think?
You know, Martin, listening to you right there, I'm struck with an amazing sense of deja vu. This is about where we were a year ago, if I'm not mistaken. We're getting hit with a barrage of bad economic news at the very beginning of the year. We're looking at equities that possibly made lows in the fall, and we're looking at central banks, at a reliance on central banks and governments to get us out of this mess. Now, admittedly, we're looking at the use of a bazooka, to use Secretary Paulson's term, rather than a pop gun like we may have been using last January. But still, as I breeze through a lot of the analysts' expectations for the year, I'm again struck with deja vu. Second half recovery due to the stimulus that's going to be put in place. Equity market recovery. I don't buy it.
You don't buy it. Okay, so it's a time for safety still. Is that what you're saying?
Yes, absolutely safety. If you think that you're going to be able to get in long equities right now and make money throughout 2009, I think you're sorely mistaken.
All right, you're smoking some strong stuff. Aaron, what do you think?
Well, we'd mostly concur with Kirby that we're in an overall downtrend for equities. If there is a sort of a bear market rally, you could trade that and use that as an opportunity to cash out of your stock positions and buy more conservative products. We'd recommend a diversified portfolio. Certainly real estate is cheap at these prices, especially agricultural land, commodities.
You're talking just grass, right?
Sure.
Real greenfield stuff.
Agricultural land where you can actually own it, use it, produce commodities out of it. In addition to that, gold being the main commodity to buy to protect your portfolio. And then ideally to get the growth aspect out of your portfolio from a diversified managed future strategy. So you're saying you can have your cake and eat it as well, safety as well as returns? Sure, absolutely.
That's okay, all right, interesting. Hold that thought. Let's get to Chris now. Is it give me shelter time or is it show me the money time now?
It's neither, really, to be honest. I mean, we are in a continued period of uncertainty. We'll be discussing these topics today. The key is, with the backdrop of macroeconomic uncertainty, the one thing we know for sure is that volatility is here to stay, whether it's in FX, it's in commodities, or in equities.
And the point is you can trade that.
Absolutely.
All right, interesting stuff.
That's where the focus has to be.
Okay, let's get right down to trading ideas, and back to you in Hong Kong. Kirby, your top three ideas: short equities, long yen, and trade oil. Let's get to the yen a bit first. I guess this the flip side of it means you see, I guess, what people are starting to call dollar debasement.
Yeah, absolutely. I think in the long run, with the amount of stimulus they're talking about in the U.S., the amount of ballooning of the deficit, no real chance to get out of this situation in the foreseeable future as tax revenues are going to be falling through the floor. There is an end game to the world funding the U.S. at the rates that they're going to want the world to fund them at. The demand for treasuries is absolutely going to drop as less dollars flow to Japan and China. They're not going to have to put those dollars back into treasuries. The U.S. is going to have to convince investors to keep buying the U.S. dollar, to keep buying treasuries to keep it down. It's not going to happen. There's
Okay, here's the thing, though. That's dollar weakness. Why is it yen strength, though?
Well, the yen is strengthening still on the reversal of a 10-year one-way bet that was the carry trade. It has become a currency, a safe haven currency right now in the current environment. God knows why, but it really is because it's strengthening as these flows come back. There is still the carry trade unwinding bit by bit. It's like a water drip torture driving the yen higher, and also some of the policies the Japanese government is putting in place, for example, to encourage companies to repatriate more of their profits, dwindling profits, I might add, but to bring the money back, to put it into capex, to get Japan going domestically. That's going to have two negative effects. Number one, it's going to cause more demand for the yen, strengthening it further, causing more pain for the exporting country that they are. And these companies are not likely to put it into capex. They're likely to sit on it.
Okay, interesting stuff. Chris, you're an FX man. Are you long yen?
We actually run 3 books: an intraday book, a short-term book, and a medium-term book. At the moment, we're actually flat on everything. I'm just curious to know from Kirby. Kirby, are you looking at sort of broad-based dollar weakness, or are you really more focusing on the yen strength?
I'm looking at broad-based dollar weakness toward the end of the year when this starts to unravel. And then you have to choose which currencies it's going to be a guess. I'm glad you asked that. I want to say one thing. I don't think that there's going to be a quick turn from the U.S. dollar to the euro, for example, as the safe haven currency. We can go through a period where there is no certain safe haven currency as there's a transition that may be a multi-year process. So it doesn't have to be today it's the dollar, tomorrow it's the euro, because I'm not a fan of the euro either, but I am looking at basic dollar debasement, yes.
All right, interesting. Dollar debasement. The flip side of that for many people, of course, is gold going up. And Aaron, you like the yellow stuff. I mean, are we talking about 1,000 or even more?
Well, gold's been going up for the past 7 years, and Kirby was talking about which is the best currency in the world, which is the safe haven. Actually, it's gold. Gold has been the currency for the past 3,000 years. It's always been the best way to store value over time, and we think that over the long run, gold will outperform any kind of cash account, any kind of money market rates you could get in dollars or euros or pounds or
short term. By the end of this year, give me a target. Gold.
Well, short term is not important. Wealth is made over the long run. We know that wealth can be lost in a year, but wealth is really generated in the long run. So over the next 2 to 3 years, we think gold goes to $1,500 per ounce.
Wow.
Just depends on how fast they print the paper in the U.S. If they continue to print it like they're printing it now,
like there's no
maybe
tomorrow?
it goes to 2,000 in the next 2 to 3 years.
Okay, we'll talk more in just a bit. We've been talking to our panel of 3 pros here on our Asian Market Week special, Beating the Odds. We'll take a quick break and be right back.